findings of the Royal Commission report in banking misconduct. Let's look at the findings of this survey in terms of relative rankings of industries. After the last financial crisis, trust in our industry, in finance industry, hit rock bottom. The last financial crisis was almost 11 years ago, the credit crisis. Since then, trust has gradually been coming back to our industry, but as you can see, we still have a very long way to go. We continue to lag behind many other industries as far as trust levels go. So we can see that our industry does not enjoy a high level of trust. And it should bother all of us in this industry, because at the very core of finance industry is the concept of stewardship, the careful and responsible management of money entrusted to one's care. The finance industry is all about trust and confidence, public trust and public confidence. So we can see that there is an issue, there is a problem. Trust and confidence are the core tenets that define our industry. And we saw the first two slides show us that trust levels are not very high. So it leads us to the question, what can we do about this? And I think very often in life, I find it helps to go back to the very basics. And I put it down in the form of 3 simple questions we can ask ourselves. Do our actions violate the law? Are they illegal? Because if the response to question number 1 is yes, they do, then it's pretty much a hard stop. We should not be going beyond it. But we should not just stop there. But if the response to question number 1 is no, it does not violate the law, we should not just stop there. We should still ask ourselves a few more questions. Even if my actions are legal, are they ethical? Are they honest? And are they fair? What would I feel if I were on the other side? And in today's session is a lot about focusing on question number 2 and question number 3, about the ethicality and about the fairness of our actions. If we look at the history of finance industry, all the bubbles that have been taking place, we see that there is a common pattern. Very often the participants in the industry, they don't cross the legal boundaries. They know pretty much which lines not to cross. But very often the lines of ethics and the lines of fairness are crossed. So we'll talk a bit about these 2 aspects today. This is one of the best definitions of ethical behavior that I have come across. It is doing the right thing when no one else is watching, even when doing the wrong thing is legal. It really goes back to the last slide. Even if the law allows us to do something, should we still be, just because we can, should we do it? Law tells us what we can do. Ethics tells us what we should do and should not do. So even if we can do something, should we still be doing it? And it's a very important distinction. Why should we act ethically? And I can't think of a better reason than this to act ethically. Just think of a day when you've done something bad. And when I think of myself, when I've done something wrong, when I've done something bad, I feel my energy levels are low. I just feel something wrong, even if no one has seen me doing something wrong. And if a day I've done something right, I feel happy, my energy levels are high. And I think it would be true for most of us. When I do good, I feel good. When I do bad, I feel bad. I really cannot think of a better reason to act ethically than this. It has to start with how it makes us feel. Of course, then beyond that, we talked about the concept of stewardship, trust, confidence, but it all has to start here, how our actions make us feel. How do we feel when we look at ourselves in the mirror in the morning? How do we feel? What does that reflection tell us? Does it make us feel happy or does it make us feel low energy? Okay, I'm going to now start a poll, and I'm going to ask you which has more influence on whether a person will engage in unethical conduct. Do you think it's our moral character, or do you think outside circumstances determine whether a person engages in unethical conduct? So I have you can see the polls on your screens. I encourage everyone to participate. A or B, disposition versus situations. Okay, a lot of polls are coming in. So we have around almost 60% people say outside circumstances. And okay, it's moving 50-50 now. That's nice. So I can see that this room today is quite divided. This group is very divided. Almost half this group feels it's a person's disposition, and the other half feels it's exactly 50-50 now. The other half feels it's a person's moral character. Okay, I'm going to park these results here. Share results. I hope you all can see the results. It's 50-50, right? It's a very, very interesting outcome. And I like this kind of outcome because that means that we have a diversity of opinion in this group. Okay. We will park these results here, and I'll talk to you about an experiment that took place in the early 70s. Many of you may have heard the name of Professor Philip Zimbardo. He's a well-known psychologist, and he was a professor at Stanford University. And he was grappling with exactly the same question on which we as a group are so equally divided today. Situational versus dispositional attribution of behavior. He was a professor at Stanford University, so he decided to do an experiment. He took a bunch of students and he divided them into two categories, prisoners and guards. And then a makeshift prison was created in the basement of Stanford University. The idea was that it must replicate real life as far as possible. So they were tiny, dingy corridors. The cells of the prisoners were very, very small with paint peeling off, very, very depressing. Even the uniforms that were given keeping in mind that they must replicate real life. So the guards, they got smart, well-fitting starched uniforms. The prisoners, they got old, ill-fitting, faded robes, the kind of robes you wear on a sunny day, and you will start feeling depressed. Now, everyone, the students, they are divided into two categories, and they are given their respective uniforms, and they are put in that makeshift prison. And now Professor Zimbardo and his colleagues are observing everyone's behavior. Much to their surprise, most participants adapted to their assigned roles, far exceeding Professor Zimbardo's expectations. The guards, in their smart, well-fitting starched uniforms with that newfound sense of aura and authority, many of them started abusing, bullying, harassing, torturing the inmates. Who were these inmates? Many of them were their college buddies. The prisoners, the inmates in the depressing environment of that prison, confronted with guards with that newfound sense of aura and authority, many of the inmates started accepting that behavior in a very docile manner. Some of them even had a mental breakdown. An experiment which was meant to last for 2 weeks had to be abandoned in 6 days because behaviors were going all over the place. So The findings of this experiment tell us that some studies have shown that situational influences have more to do with a person's ethical behavior than a person's character. Under the right conditions, or for that matter, the wrong conditions, like the Stanford prison experiment, good people, like all of us in this group today, can be induced, seduced, and initiated to act unethically. And I'm not saying that we will go out and start abusing our family members or our colleagues. What I'm saying is, every single day that we go to work, we are confronted with so many pressures. Pressure to keep the boss happy, pressure to keep our clients happy, pressure to think about our next promotion, pressure to think about our performance metrics. Irrespective of whichever industry we work in, there are multiple pressures on our time at any given point in time. And sometimes those pressures can combine and overwhelm us and lead us to act in a manner which may not be in sync with how we like to think of ourselves as ethical individuals. So today we'll talk about some of those pressures. I call them situational influences. Today we are going to discuss some of those situational influences. But before we do that, we often make unethical decisions not because we are bad people, but because situational influences can affect our decision making. These biases and influences lead to weaknesses in how we process information and make decisions, which can lead to unethical behavior. We are going to do another poll now. Which of the following situational circumstances will influence? When I say a person, think of yourself. Which of the following situational circumstances will influence you to engage in unethical conduct? And you have around 6 options here. So, let me start the poll. Relaunch polling. Sorry. Pedro, I think I'm having some issue launching the second poll. Okay. Yes. Okay. Choose from these 6 options. Which of the following situational circumstances will influence a person to engage in unethical conduct? Obedience to authority, conformity with others, incrementally engaging in unethical behavior, following group decisions, or overconfidence. Let's see how we think of these. I'm sure all of them play a role, but whichever you feel is most important, let's look at that. We'll give it a few more seconds. Lots of polls coming in. Around 60% of the participants have voted. We'll give it another few seconds. Okay, let's have a look. Okay, so almost 42% people feel it's obedience to authority. It's a fairly, it's a nice array of results. 30% people feel following group decisions, and then conformity with others, incrementalism, and overconfidence. Okay, thank you for your polls here. Let's look at some of these. So it seems to me that as a group, we feel that to some level or the other, all of these influences have a role to play in whether we engage in unethical conduct. Let's look at them one by one. Obedience to authority. We are far more likely to take unethical actions when requested by a boss. Why? We want to please authority. It may lead us to carry out instructions without thinking about the ethical implications. And bosses are very smart. They will rarely ever ask us to do something unethical in a straightforward manner. Instead, it will be couched in terms of incentives or our year-end performance, which will make it difficult for us to figure out that something wrong is going on. How do we rationalize our actions? I want to be a team player. I was just following orders. What was I to do? I was just following orders. Obedience to authority. Conformity. We often take our cues about proper way to act from our colleagues, from our peers, from others in the industry, we feel if everyone else is doing it, it must be okay. They become our reference group. We conform our judgments to the judgments of our reference group. How do we rationalize our behavior? Everybody else does it, so it must be okay. It's how you succeed around here. That's the way it's done out here. Let's look at some other factors which we voted on. Groupthink. Being in a what happens when we take decisions as part of a group? It lessens our individual sense of accountability and responsibility, because both the responsibility is shared by the whole group. We don't individually feel responsible for it. Our moral doubts are assuaged by the group's concurrences. Imagine yourself at workplace and your whole team is taking a decision which you have some concerns about. You think there are ethical issues there. How difficult or easy do you find to take a stance and stand out and raise your voice? We all like to belong to a group. We don't want to be seen as the person who's creating issues. How do we rationalize our actions? We are a good and wise group. This is the way it's always been done. Incrementalism, the slippery slope. We gradually lower our standards over time through small incremental changes in our behavior. The changes are so tiny that we don't even realize till it's very late. How do we rationalize it? Just this one time. Quarter end is coming. I haven't met my performance targets. Let me recommend this product to my client, which I know is not in his or her best interest. Next quarter comes, I'm a very ethical individual. I will not repeat this behavior. Trust me, next quarter comes, we will find it so much easier to replicate that behavior, not only with that one client, but maybe with several other clients as well. It's the classic slippery slope. Beware of that first step down the slippery slope. When you find, if you ever hear yourself rationalizing your actions by saying just this one time, it doesn't really hurt anyone. I think you should take a pause. You should think about what you are about to do. Overconfidence in our own ability to do the right thing. We all tend to believe, trust me, all of us tend to believe that we are more sorted, we are more ethical, we are more sensible than our peers, than our colleagues, than other people in the industry. And that leads us to take actions without indulging in adequate deliberation. How many times have we told ourselves, I am more ethical than others, I am more sorted, this will not happen to me. Framing. Objectives are often framed to focus on one factor. If your boss is telling you that our focus is assets under management or the stock price of the company at the end of the quarter, we become so focused on that one objective that we find it easy to rationalize anything that we have to do to achieve that objective, right? We often overlook or justify behavior if it leads to the achievement of that goal or objective. And we know how incentive structure in this industry is. It leads to a lot of issues as well. That goes back to that framing about, how fees are, dependent on the amount of, how bonuses are dependent on the amount of fees generated, commission generated. So framing is very important. Effective ethical thinking begins with becoming more conscious about our thoughts and behavior so that we can recognize and we can notice ethical issues before they become a problem. Recognizing that ethical dilemmas are a normal and predictable part of most jobs, and discussing approaches for dealing with ethical issues. Having made that context, set that reference, let's look at a small case study, and I'll open the polling shortly. You are a fixed income portfolio manager who works as part of a team that invests the assets of large institutional clients. The members of your team tell you in confidence that they plan to resign from the firm to start their own investment management firm. They invite you to join them, but you decline. You know that their actions will at least temporarily affect the performance of your clients' portfolios. So you work as part of a team. Several members of your team decide to leave, and they make you an offer to join them. You decline. You are very well aware that they are not doing it the proper way, and when they leave abruptly, it's going to impact your client portfolios. However, you decide to do nothing about it, to say nothing to your superiors. Your actions are okay because you are respecting the confidentiality of your colleagues, probably okay because personnel turnover is a commonplace occurrence that is to be expected, probably not okay because client performances will be affected, or not okay. Let's see how we think about this case. Your actions are A, B, C, or D. We've got around half the participants have voted. We'll wait for the other half to finish voting. Okay, couple more seconds. Okay, let's have a look at the results. Okay, so again, very divided results. Almost 40% feel probably not okay because client performances will be affected. So if I combine C and D, almost around 65% people, overwhelming majority feels these actions are not okay. However, 20% feel they are okay because you are respecting the confidentiality of colleagues, and some people feel personnel turnover is a commonplace occurrence that is to be expected. Let's think about these results for a moment. I can understand that, colleagues we are working with, many of them become our friends. And if they come and tell us something in confidence, maybe we are breaking their trust if we go and say something about them to our superiors. However, if I were to, and I can understand why some people also feel that personnel turnover is a commonplace occurrence. Is it really my problem? Why should I make something my problem? As it is, I have so many issues going on. Why is it really my problem if my colleagues are leaving, or is it management's problem? So I think the way one would think about this is, when confronted with such dilemmas in life, I find it really helps, and it's a good tip I would like to share with you. What really helps is to take a step back and think about, who do you owe a duty to in this case? And if you were to think, just step back and think about it, you will realize that if client portfolios are getting impacted, you realize you owe a duty to your client, to your employer in this case, right? And it's not a binary, like either you do nothing or you go and complain to the management. There are ways to deal with it. Sometimes people don't even realize the impact of their actions. Maybe have a constructive dialogue with your colleagues, maybe make them realize that they should do it the proper way so that client portfolios don't get impacted. Just some things to think about. I mean, I just put up this, it's a very simple case and it's a real life situation which somebody faced. So we, wrote a case out of that. And in that case, that person said, they said, I grappled with the fact that I am, maybe I'm breaking the confidentiality of my clients, but they said we had to think about who we owe our duty to. And if we look at the first two slides that I shared with you, the trust levels in our industry, it tells us that we have to make sure that we are putting investor interests first. Who's the investor? Investors are our clients. We have to put their interests first. So I want to spend a couple of minutes talking about CFA Institute. I work for CFA Institute, and it's our mission statement to why has CFA Society Portugal and the Institute organized this? Because it's part of our mission statement to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence. For the ultimate benefit of society, I have highlighted the last 6 words. These words were added to our mission statement after the last financial crisis, when there was a lot of discussion which took place at the Institute and our different societies. And we realized that this profession cannot exist in a silo. Whatever we do in this profession, in this industry, must be in sync with what's for the larger benefit of the society. Our ethics pedagogy is based on our code of ethics and standards of professional conduct. These code and standards provide useful guidelines to professionals to navigate ethical dilemmas. What I've done is, in the next slide, I have picked 9 fundamental ethical principles that are the building blocks of these code and standards. Client interest comes first. We already spent a lot of time talking about it. Independence and objectivity. All our actions in the industry must be free of internal and external pressures. They must be taken keeping our investors' interest in mind, our clients' best interest in mind. We should learn to manage, I would say in an ideal world, try to avoid all conflicts of interest, but we live in a real world. It's not easy to avoid all conflicts of interest. We should learn how to manage them. Code and standards teach us that disclosure is a good way. When you are confronted with a dilemma, sometimes make sure that you disclose it to your clients, to your employer. What does disclosure do? Disclosure gives your employer, your clients, and heavens forbid, if something were to go wrong, the regulator an opportunity to assess your independence and objectivity. This is, I think, illegal everywhere, using material non-public information, insider trading. We must deal with all our clients fairly. Diligence literally means what it means in the English language. Put in the work. Make sure that when we are investing our investors' money, our clients' money, we have put in the work. Just because we looked up a hot security in an internet chat room, or we overheard some conversation over lunch, don't invest your client's money based on that. Put in the work. Reasonable care and prudent judgment. Care means causing no harm to our clients. Prudence means acting with caution, skill, care, diligence. Basically, it all boils down to not causing any harm to our clients. Yes? Did anybody want to say something?
Sorry, there is someone here asking what you mean with MNPI.
MNPI is material non-public information. Material non-public information, if you make decisions based on information that is not widely known, that has not been disseminated in the market, and which could cause the stock price, the price of a security to move, you should not be making decisions based on that. It is called insider trading. Why should we not deal in material non-public information? Because it compromises the integrity of the capital markets. It basically means if somebody is making money based on MNPI, that means people with privileged access to information can make money at the cost of general investors, regular investors. And CFA Institute Code of Ethics is very, very clear about maintaining the integrity of capital markets. Okay, let's do our last polling question for today. Since there is a global pandemic going on, I picked up a case to do with pandemic. There is a global pandemic. Everett Inc. is a major sports equipment manufacturer. They have temporarily shut down their operations and laid off several employees. The government is considering invoking emergency powers and contracting with the company to make desperately needed medical equipment. You guys, everybody's known that this has happened to some companies. They had to shut down their operations, and the governments have invoked emergency powers and asked them to make ventilators. A team of Everett's engineers is working on retooling the machines at the company's manufacturing plant. In addition, when regular product production resumes, the company will be eligible to receive low-cost loans under a government stimulus plan that would have positive impact on its long-term financial position. So we saw they have been contracted by the government to manufacture maybe ventilators or other personal protective equipment. And so the engineers are already retooling the machines at the company to manufacture this. And when regular production resumes, the company will also be eligible to a low-cost loan from the government. Mr. Jabri is the CFO, the Chief Financial Officer of the company. He is responsible for investor relations as well as managing the employee pension plan. He is wrestling with how to address all this information in a disclosure to investor. He's wondering, what can he tell investors? So if you were the CFO of this company, what would you do? Would you refrain from providing any of the information because future is quite uncertain? Would you disclose the potential contract and that the engineers are working on retooling? Would you express confidence to investors that in your opinion, the low-cost government loans will result in minimal disruption to the profitability projections? Or protect investor interest by actively discussing the company's long-term financial prospects to keep the stock price from collapsing? You are the Chief Financial Officer of the company. What would you do? Let's see. Okay, the poll is on. Let's see what you choose. Oh, the D, option number D is missing from here. Okay, sorry about that. Let's feel maybe we have only 3 options. Let's only talk about 3 options. Okay, we have almost 40% votes in. We'll give it a few more seconds. Okay, let's have a look at the results. Okay, overwhelming majority feels disclose the potential government contract and that the engineers are working on retooling. 16% each feel refrain from providing any information or express confidence to investors that in your opinion, the low-cost government loans will result in minimal disruption. Okay, thank you for your polls. Let's discuss this quickly. So I understand there is a lot of uncertainty going on. Obviously, we don't know which way the pandemic will go, whether the company will be able to manufacture, will the engineers be able to retool, will they be able to manufacture those ventilators and PPE? But the fact also is, so there might be a temptation to not share anything with the public, but being the CFO of the company and being responsible for investor relations, it is your responsibility to provide as much, realistically, as much information as you can for investors to make informed decisions. So in that sense, A is really not an option here. You cannot refrain from providing any of the information. Most of you chose disclose the potential contract and that the engineers are working on retooling. I would agree with that. Those are facts. But just be very, very careful because these are at an early stage. What we need to be careful about is that we are not divulging material non-public information. We already discussed in the last slide about material non-public information. As the CFO, you must be very careful about two things. A, how you are divulging this information. Just first make sure that it's all within the realm of it's not material non-public information. And secondly, that all the investors get the information. It's not that you only tell a few investors about it. Option number C was express confidence to investors that in the low-cost government loans. Again, I agree, low-cost government loans have been, it has been said that it will happen, but it is at an early stage. Just make sure that, that is the relevant information that is being given, and avoid giving any opinion about, there will be minimal disruption to profitability projections. In these volatile times, I think it's best to stick to facts instead of, mixing facts with opinions. So just give the facts to your investors without giving unnecessary opinions about it. So again, this case is just to highlight how even, interacting with investors is rife with a lot of ethical dilemmas. CFOs or whoever is doing this interaction should be very, very careful about the kind of information they are giving, in what manner they are giving. They have to strike a fine balance between all these issues. Okay. I just want to spend a couple of minutes talking about rationalizations. They provide justifications for not taking the right course of action. They can neutralize ethical intent by reducing the negative effect. They can justify our behavior and change our perception of a situation. What are some of the common rationalizations? So this slide is very important. Look at it. Every time you find yourself saying one of these things, you should be very careful. I leave you to read it. Yeah, so beware of rationalizations. What I want to do is, in the last 5 minutes, I want to give you some tools, some techniques to help you navigate to help you become more aware of ethical dilemmas, so that you realize when there is a problem, and possibly to help you deal with them. They don't provide any magical solutions, but they will help you think. Perceiving change. So please don't try this experiment at home, but they say if you take a frog and you put it in a pot of boiling water, the frog will make every attempt to jump out and save its life. However, if you put a frog in a pot of water at room temperature and very gradually tune up the temperature, the frog's body will keep adapting to these incremental changes in temperature, and it will definitely boil to death. The point is, when we have been in the water long enough, just like that frog, things start appearing ordinary, they start appearing normal, even when they are changing, because the changes are so incremental. We talked about incrementalism, we talked about slippery slope. So please be very aware of the changes happening around you in the environment and even within you, how you are rationalizing your actions. The slippery slope, we talked a bit about it. There was a Wharton Business School study done, and they wanted to understand the reason for earnings mismanagement by listed companies. We all know that listed companies are under a lot of pressure to every quarter to show earnings which are in line with market expectations because the stock price gets impacted. So they wanted to understand what goes on. And what this study found was These misrepresentations often start with small acts of earnings management by over-optimistic managers, company management, who feel what they are portraying is closer to reality. And next quarter comes, things will be fine. So they tweak the earnings a little bit. Think of Enron, think of WorldCom. I can give you hundreds of examples. It all starts like that. However, next quarter comes, things become more tough, things become difficult. So they push harder, the accountants do some more tweaking. And from there, it's we all know what happened to Enron and what happened to WorldCom. They both filed for bankruptcy and several other companies as well. So the point is, what is most important, I mentioned it earlier as well, to avoid that first step down the slippery slope. Blind spots. As human beings, we see what we want to see and what we expect to see. But we should know that our wants and our expectations are self-serving. Because they are self-serving, we fail to see ethical dilemmas when they are staring us in the face as well. Harvard Business School did a study. They wanted to study blind spots. So they took a bunch of accounting students and they took a bunch of experienced auditors and they divided them into 4 groups. Buyers, sellers, buyers auditors, and sellers auditors. And then all 4 groups were given same financial information about a company which was to be sold. They were all asked to assess the fair value of that company. They were told that they all have the same financial information. They were asked to be as objective as possible, and they were told that they will be rewarded for the accuracy of their assessment. Just that division, just that classification impacted how everyone was thinking. The buyers, the group that was the buyer company, their assessment of fair value was far lower than that of sellers. Even the experienced auditors did not escape these blind spots. The sellers auditors, the difference between the fair value between sellers auditors and buyers auditors was 30%. No one was cheating here. It just shows you the self-serving bias of our blind spots. So be very, very careful about how you look at these situations. My favorite one is really seeing our actions from the eyes of the others. Look at your actions, put yourself in the shoes of the person who's getting impacted and see how it makes you feel. If it makes you feel uncomfortable, unhappy, if you feel it's unfair, maybe you should avoid those actions. Ethical reminders, something you liked from this session, maybe jot it down and put it up in your work area or near your desk, on the wall near your desk. Any good article you read, something resonates with you, maybe file it so that it's there on your work desk and whenever you have easy access to it. The idea of having these ethical reminders is to have some prompts that make you think when you are confronted with an ethical dilemma, instead of encouraging you to indulge in self-serving rationalizations and blind spots. So like I said, these are very simple tools. They don't give any magical answers, but they help you think. And the idea of this whole session has been to make you think. Ethical muscle is just like an athlete. They do regular training to build up their endurance, to build up their stamina, to build up those muscles. Similarly, we can build our ethical muscles through regular training, through looking at these reminders every now and then. I would like to end today's session by my favorite quote from Warren Buffett. After they obey all rules, I want my employees to ask themselves whether they are willing to have any contemplated act appear the next day on the front page of their local paper to be read by their spouses, children, and friends, with the reporting done by an informed and critical reporter. In this digital age, think of a YouTube video of your actions going viral and being watched by your spouse, your partner, your colleagues, your bosses, people you care about. And if that makes you uncomfortable, it should give you a pause. You should just stop and think before you take those actions. Yeah. We have around 10 minutes. We can, if there are any questions, we can open it to Q&A. Otherwise, we can end the session. Any thoughts, any questions, any points anybody would like to raise?
Yeah, I would like to raise.
Yes, Rosina, yes.
Yes, I guess that Warren Buffett have written that long time ago, because recently I consulted his website and we can see some recommendation about jewelry watches. I'm not sure if all his friends and relatives also enjoy that brand of luxury watches. Thank you so much for your insights. Very, very nice to know your works and the experiments that you shown us are clearly a mindset that we need to take into account, especially in defining mission statement and why all the community shareholders and investors should care for that project. And we now face all these tremendous dilemmas of cutting wages and salaries and re-affecting lines of production, and all of that is very present nowadays in Portugal. And do you think that we should also be able to change the values of the assets in these contexts? What do you think?
Sorry, but I didn't get your values of what?
It should be fair, should be ethic to change the value of the assets to preserve the jobs, the productive ecosystem. Should we use our skills to change how we value what now is so scarce and we have?
Yeah, I mean, whatever is in line with, you know, what's for the good of the society, I think those actions should be thought about. And these unprecedented situations make us think about issues, right? Who would have thought that sitting at my kitchen table in London, I would be conducting this session. I used to travel everywhere to do it. Many of you are, everybody is logging in from home. So it's changing the way, you know, we work, we think. And I agree with you. Maybe these are times for a reset to really think about some of the issues which in our day-to-day life, we never gave much thought to.
Thank you.
Any other thoughts or questions? Okay, Marcos, I think we are done here.
Yes, Sonia, thank you very much. I think it was a very insightful session. Once again, thank you everybody to join us. It's a pleasure always to talk about this issue. I think we have a long way forward in our society, not specifically in Portugal, but all around the world. But what concerns us is Portugal. In this sense, I think we have an enduring way to go forward, but I think we as a society are quite committed and ready to go to the next level and to measure up to all our ambitions in terms of ethics and becoming and contributing to a more transparent markets and companies and financial world. So once again, Sonia, thank you. And thank you, obrigado a todos por nos terem juntado a nós e desejo a todos também uma boa participação no resto da Semana do Investidor. Muito obrigado.
Obrigado.
Thank you. Bye-bye.
Thank you.
Bye-bye.
Thank you.
Obrigada.
Thank you all.